Hi everyone, Emily Wallace, your buyer's advocate. This is part one of a two-part series based around some terms to do with taxation, and I am so fortunate to be joined by Matthew Wallace, who is one of the managing partners of KPMG in Hobart and also happens to be my father. Welcome, Dad.
Thanks, Dave.
So, first things first, Dad, what is negative gearing? We hear this term all the time and not everybody knows what it means, and you shouldn't have to know what it means, but we're going to explain it to you.
Sure, we'll try and keep it simple. Now, negative gearing refers to the situation that exists when the income from your investment property is not sufficient to cover the expenses that are incurred in respect to that property in a given financial year.
Right, so basically what's going out is greater than what's coming in.
That's exactly right.
Right.
And the current tax legislation allows you to take that shortfall or that deficit, that negative gearing, off your current taxable income.
Right, great. And so you mentioned the word expenses. What sort of expenses would you incur when having an investment property?
Well, the most significant expense is normally interest. Most people normally have a mortgage on their investment property, but there's lots of other costs like rent, land tax, there could be some utility costs, repairs and maintenance, insurance, an important one, gardening, and other things associated with the property are all tax deductible or part of the costs that make up that negative gearing.
Great, and those ones that you just mentioned there are usually calculated year by year in a financial year?
Yes, you're normally paying for them each year.
Yeah, and so in addition to those expenses, is there anything else that you can claim over time?
Yes, there's two other allowances, if you like, that the taxman allows you to have. One's depreciation, but it's only on new items of plant and equipment. Okay. And the second one is a capital allowance, which is capital works, structural improvements, building works, and you have a 2.5% deduction on that over 40 years. So the actual cost of a new dwelling is actually allowed as a deduction over 40 years, 2.5%. Right.
And just to clarify one final thing before we wrap up, negative gearing is only applicable to investment properties, correct?
It's only applicable to investment properties. Your private residence is not taxable, and therefore you don't get any tax relief being negative gearing on your own private residence, and nor is it subject to capital gains tax.
Great. Hopefully that's provided some clarity for you around the term negative gearing and what's involved in negative gearing. The second part of this series will be on capital gains tax, so stay tuned for the next video. We'll be uploading it soon.